Well, good morning, traders. And yeah, there's been no panic coming through markets, but there's definitely been some de-risking playing through. If you look at the headlines, it's all about concerns around economics. Maybe. I think if you look at the sort of catalyst which everyone's attributing it to, it's down to the idea that Raphael Bostic, the Atlanta Fed president, has said that renewed concerns around the coronavirus may impact economics. Perhaps that's a reason to take a little bit off the top, but I think generally economics so far have been quite inspirational relative to consensus. They've been consistently beating expectations. We also saw Vice Chair Richard Clarida saying that more could be done with the balance sheet. They're talking about forward guidance or strengthening forward guidance, potentially buying more on the Treasury side, potentially more on the mortgage side as well. I think if you look at the fixed income market and certainly go out to the longer end, you've seen 10s down 4 basis points, you've seen 30-year Treasuries down 6 basis points, and that's been where you've seen the outperformance in the Treasury curve, and that's flattened the curve by about 4 basis points in terms of 2s, 10s. And I think that's really weighed on the financial space. So if you look at financials within the S&P, it was down 2%. So that's a really interesting message that you're seeing in fixed income. You've got 5-year Treasuries testing the March lows at the moment. That will be interesting to see if that can break through there onto the downside. And there seems to be this big disconnect between cyclical assets and Treasuries, one right, one potentially wrong. We'll have to see how that divergence plays out. But certainly those comments have weighed on risk, and certainly you've seen the S&P down 1.2%, the NASDAQ outperforming down about 0.7, 0.8%. But small caps is where the underperformance has been seen. You've seen Russell down 1.8%. I will say that volumes have been very light, 28% below the 30-day average in terms of turnover, 1.3 million SPUs traded hands. I think that's something that is also a bit lighter. Markets have fallen under very low participation there. In terms of the open for Asia, it's interesting to see SPY futures down about 0.5%, same in Nikkei, and you've got probably a little bit of outperformance from the Chinese markets there. One to watch, not a huge amount of data to watch today. You've got Chinese CPI and PPI, unlikely to be a volatility event. In terms of FX markets, you've seen the dollar up about 0.2, 0.3%. Risk currencies under a little bit of pressure, and all the focus, given what we've been seeing in the Treasury market, continues to be on the gold price. Will we see gold testing and breaking 1,800 anytime soon? Well, a lot of that really depends on what happens with the Treasury market, but one to watch and trade it with Pepperstone.